CPI data just in, and it's looking bullish. Markets are cooling off a little bit, but we need to talk about the bigger picture here. Can we now get that rate cut from the Fed? Loads to get into today. Smash up the follow button and the like button depending on where you're watching. Let's go straight across into the numbers because we got some really important numbers today. I want to focus your focus here exactly on this CPI data. 2.4%. It's the lowest reading since September. So that's 6 months. The expectation was closer to the 2.5 level. So we beat on that level, which is really good. So that's nice. If we then jump on over to the month-over-month figures, inflation rate month-over-month, that's going to give you your run rate. And this is where we got some nice news. It's a negative number. The first we've seen for a very long time, at least in the last year, showing that inflation slowed down by 0.1. We got a deflationary 0.1%. If you annualize that, that's 1.2% deflation annually on the month over month. If we jump onto the core inflation rate, that is where we got the best number in my opinion. I think this is the number that the market should focus on. The core inflation straps out food and energy. And what you're looking at here is a 2.8% reading, less than the 3% consensus. But more importantly, the first time we're below 3%. Look at these huge candlesticks here below this in over a year. Very important. In fact, if we even go on over to the longer term view, you can see just how this is coming down over the period of time, right? The last time we've seen numbers down here with a 2 handle was exactly this reading here around March of 2021, which is insane. Inflation is trending down. Now, of course, there are some few things we need to take into consideration. The markets are doing exactly that, right? The S&P is down 3% today. The Nasdaq is down 3% today. And you know, it'd be silly for us to expect us to just continue to pump here. Markets yesterday rapidly pumped back to sensible levels. Again, let me show you the daily chart here on the S&P, and I'll do the same for Bitcoin shortly. If we go back to before Liberation Day, right, on the 2nd of April, we opened up on the S&P at, in fact, let's look at the close number. We closed at 564. The next day, we fell 5%. The day after that, we continued to fall, right? That's where the pain started. So if you want to get back to normal, you need to get back up here. Yesterday, we got pretty close, right? We closed yesterday at a high, we hit a high of 548. Now, you're not going to bridge the exact difference. You're not going to just get back to where you were before Liberation Day, because Liberation Day was always going to announce tariffs and markets were always going to be upset at any rate of tariff. So Trump doing 125% on China, him doing 10% on the rest of the world, markets have to price that in, and it will have some effect on inflation, right? Now, it's still far better than the blanket tariffs he announced on that day, which yesterday he reversed on. That's good news. But it doesn't mean we can just suddenly go to the moon again. No. But it means we're back in the game, right? It means that we can now focus on these inflation figures, try to understand that, you know, the next month or the month after might be a little bit higher, but it's good that we're breaking the back of inflation. I think that's something we should focus on. Let's refresh Truth Social to see if Donald Trump said anything following this CPI reading. But of course, there you go. Just down. Inflation is down. Of course, he's going to pounce on this. He wants to put pressure on Jerome Powell to cut those rates. If we jump on over to the Fed monitor tool, we have to remember that the next FOMC meeting is in 3 weeks and 6 days time. That's on May the 7th, just shy of a month from now. And markets aren't fully expecting a rate cut, right? You got 15% here pricing in a rate cut. Some had priced that in a little bit more with the higher tariffs. It's cooled down with the reversal. Is it going to go up over the next day or two? Maybe. I personally don't think Jerome Powell will jump the gun and do a cut, particularly since Trump has, you know, reversed his thoughts yesterday on the broad stroke tariffs that he'd previously applied. So I think that's interesting. Let's now jump on over to the suits to see what they're talking. Actually, no, they're not talking about anything interesting there. So let's just jump on back onto the Bitcoin chart, where we're forming a very important pattern. We are forming a W pattern, right? And the W pattern actually broke out from neckline. But what typically happens once you break out is you get a retest. And I posted this on X earlier today. I want to see this respond. It's important. If we don't, you got to get ready for some more pain down here, right? So I'm looking for a bounce here. Anywhere around this rectangle, can be slightly lower. As long as we bounce and get a higher high, onwards and upwards, we can go up towards 85, 86 and beyond. Okay, it's normal that markets are calling off today. Yesterday was a historic day. I think I was reading it's the biggest day on the S&P in traditional markets since 2008, which is the financial crisis. So, you know, there was a lot of pent-up excitement yesterday, and naturally you're going to get some profit taking from short-term traders into that move. If we zoom out on the daily chart here, are we out of the woods? No. We've got work to do. I think it's important we understand that. Yes, yesterday was good. It gave us the hourly trend back. It gave us the 4-hourly trend back. Sure. But here on the daily trend, we're getting rejected by EMA ribbon, right? It's important that that little W pattern I just showed you breaks out, and we can use that W pattern as the reason we can start working to reclaim that daily EMA ribbon. That is what I want to see. Us getting that daily EMA ribbon back is going to be fundamental. Hold it and start working our way onwards. Again, our weekly trend is very, very important. So far, thanks to the announcement yesterday, we're trying to bounce off this EMA ribbon on the weekly chart. We were very close to losing it, right? We wicked below it. And now I just want to see us consolidate. It's not important that suddenly, this week we go and close up at 92 and 90. No. Just keep it green. Just keep it green. I mean, if we get higher than last week's open, which is 82, let's look at that exact number. I think it was 82.3. Yeah, 82.3 is good for me. That's a bullish engulfing candle. I'd take that. Right, so we got 3 days for that to happen. As long as we close on Sunday evening, around 82 or 83, I'm pretty happy with that. That's a really positive weekly candle and sets us up for more positive weeks moving forward. That's my main focus right now in terms of the charts. Let's see what some of the suits are saying.
To their iPhones in China.
They do, and some sent to Vietnam, but there are people in the White House who think that's just transshipment. Put some screw.
And guys, please let me know if you can't hear the TV clearly or if you need the volume up. I'm not hearing it at the same volume as you.
David, there's trying to make a discussion right now about exemption and Apple. It would be devastating to the Chinese if they gave Apple a year-long extension to be able to move away, because then Apple wouldn't be hurt and Apple would know it'd have to leave. And at that point, it would get to 2,000
engineers. Can Apple really leave? I mean, what I hear is
engineers who are crucial to the Apple, to Apple development and making.
And the Chinese, I hear, don't want to let them leave. And then the specialized tooling as well. It's not that easy.
No, but I'm saying that if you gave them a glide path to get out, the Chinese would lose 2 million workers. It's about how many it would be. Apple would not be hurt. Apple would become prominent.
See, so as part of it, you may want to give Apple an exemption. That's puts even more pressure on the Chinese.
Exactly right. Let's say you gave them a glide path where it would be 10%, then 20, then 30, then 40. They take 2 years. They said they're going to spend $500 billion in the United States. So you should be. They should be able. The president's touting it.
I know,
so that should be the course of action.
They're never moving iPhone production here.
No, but if you want to hit China, have them move it.
All right.
Sorry, guys, I just want to bring your focus back to the inflation numbers again. This is the core month-over-month reading. Came in at 0.1 versus expected 0.3. That's huge, right? 0.3 annualized is 3.6% core inflation rate. Coming in at 0.1 means it's 1.2. Lowest level we've seen since May, June shows that this little bump is starting to settle down. Again, let me just show you this over a longer time frame. It just shows that we come back down from that bump. We can start to bring it down to some sensible levels, which is a good look, right? That's a good sign that we can start to come back to some normality. Remember, a month-over-month figure of 0.2 to 0.1 is good. That's within the Fed's range, right? 0.15-ish is about the Fed's range to get to your 2% annualized rate. So that's not too bad, okay? So that's a good figure. Markets should be happy about this. They need to now focus to see, are we going to get a rate cut? I don't think they're going to jump the gun on it, but it's one piece of data. Tomorrow we get PPI inflation. Later in the month we get other piece of data. We got to look at the jobs data as well, because remember, the Fed don't just look at inflation, they look at the jobs market as well, and then we can use that. Now, of course, Trump's team will use this to start celebrating, right? Trump yesterday was very worried about the bond markets. He was very worried about what his billionaire friends were saying, which is why he U-turned, right? He even admitted he was looking at the 10-year bond chart. He was looking at it, and he was worried when it got to those levels at 4.3, 4.4, etc., and kept climbing. If you take a look at this from Donald Trump Jr., posting the inflation numbers, which we just looked at, but he added promises made, promises kept, right? So they're taking this as a win from the Trump administration. The reality is we know inflation's coming down, and if anything, we might get a little spike up in the following readings, because this reading was for the previous period. There's no way the tariffs have taken effect and gone through the supply chain for us to see higher prices just yet. More important will be some of those other factors. But the good thing we can now do is when those other numbers come in next month and the following month, we know that we have a sensible base and the rest is tariffs, right? So if we know we're at 2.4% underlying economy, so to speak, and now we go back up to 2.8 next month, we can make the argument that that 0.4 is the tariff related. How long is that going to last for? Will it be transitory, and will it settle down? Okay, so at least we got some breathing room, in other words, in terms of the figures we're seeing.
Percent yesterday. The NASDAQ 100 up 12%. So it's natural to see some of that enthusiasm drain out a little bit here. The 10-year yield is an interesting one at 4.3%, down 3 basis points or so. You really didn't see a huge reaction in the bond market yesterday to that pause that we saw from the president, Matt, at least in the Treasury market. Certainly not relative to what we saw in the equity market.
Yeah, I think the Treasury market is the most fascinating, even though you have a big superlative on equity markets, right? We saw a 10% rally.
Yeah.
That's mind-blowing.
Yeah.
But more people have written in saying they're really concerned about the credit market, which is why I wanted to bring on our next guest. It's time for the Wall Street Beat. Credit is holding up seemingly well amid the recent volatility over President Trump's tariffs. That's according to Goldman Sachs' chief credit strategist. He spoke earlier today.
This can be
Not all
important.
crises are credit crisis. Violent as the price action has been, I do take comfort from the fact that the microstructure of the market, or the plumbing of the market, has actually held up very well.
Now, on the other hand...
Okay, we'll come back to this in a second. I just want to cover this off with you guys here. So this is from Kevin Hassett.
A 90-day pause on some tariffs, excluding China. Joining us now with more, National Economic Council Director Kevin Hassett, who all along, I think we divide people up into the negotiators that...
Morning, dear Sven. It's good to see you back in the chat, buddy. Guys, if you're watching, join us in the chat. Any single one of you watching, join us in the chat. Make sure you're followed as well. Engage. These live streams are for engaging.
And that was maybe the Commerce Secretary and maybe Peter Navarro. Looks like something that you said earlier in the week, Kevin, that sort of got, I don't know, circulated as fact instead of fiction. That was like a...
So what they're referring to there is, remember when we were live streaming and then we got the fake news? Well, we got the news from this guy saying the quote was that we're going to have a 90-day pause, and the market started rallying. But then the White House said, no, that's fake news, and the market dumped again. Turned out it was never fake news. It was right. The Trump always had this plan of doing this 90-day pause. This was his strategy, right? It's the art of the deal. Anybody who's read that book, you will know. You know, you go in with the crazy claim, the bid it up, get people scared, and then come in with something more sensible. He was always going to do this. He just used the Treasury market to time it, and that's what we're talking about here.
A market check. Yesterday it happened, and indeed, 3,000 points.
Well, first of all, I don't really like the characterization that we're divided amongst teams. In fact, I would say that the person who, right at the final minute, was with the president when the president decided to do the pause that we had been talking about all along was Secretary Lutnick. Secretary Lutnick and Secretary Bessent were in the room for the final call with the president. And I think that's a nice clarification of how we're not on different teams, warring teams. We're all on the same team.
I know boys will be boys, according to Carolyn Levitt, but are you not on X? You didn't. I still don't get anything except talk about that whatever you want to call it, that food fight between Elon Musk and Peter Navarro.
Well, as you know, that I practice a martial art called Aikido, where basically what you try to do is redirect negative energy so that it works against the guy and doesn't turn it into an all-out scuffle. And I think verbal Aikido is a better choice. It's a better choice.
So, Kevin,
it's a better choice for people.
I characterize it as the art of the deal on one side and hitting your head against the wall until, because it feels so good when you stop, and that the actual what happened yesterday was somewhere in the middle. I guess you'd say it was all art of the deal. This was the plan all along to goad China into being isolated?
Well, I think that what's been going on all along is the president recognizes that in order to get the big change that we need for America's workers, like these are really fundamental changes that we're talking about, that we need to create enough pressure on our trading partners that things that American presidents have been asking for the last decades are actually offered at the table. I can say that I was on a call with the Swiss president yesterday with President Trump. We've got a whole system set up through Susie Wiles and the cabinet secretaries that we're starting to have a meeting today after lunch, where we prioritize our allies and other countries and decide who or when is going to visit and when. But I can tell you that the amount of stuff that's coming to the table came up really a lot, long before the market movements this week. And so it was looking like that there had been enough action to get us to the point where we should really genuinely start negotiating. And if you go back and look, you can see the negotiation signals were out there already, even on that Monday where somebody made a fake tweet that suddenly said that I was saying something that ended up being kind of mostly true on Wednesday. And so anyway, I think that everything was moving forward in an orderly fashion.
Your plan got leaked.
No doubt that the Treasury market yesterday made it so that the decision that it's about time to move was made, I think, with perhaps a little more urgency, but it was going to happen.
So there you go.
Anyway.
You expect real negotiations, but over the next.
And that nails it there, right? He just admitted there, if you just play that little 10-second clip again.
But it was going to happen at any moment anyway. The market yesterday made it so that the decision that it's about time to move was made, I think, with perhaps a little more urgency. But it was
Thank you very much. So they looked at the 10-year chart, they had a panic attack, and Trump had to put that tweet out. It was obviously part of his plan. He always had a backup plan that if things go to, hit the proverbial, he would pull this button. And then when he saw this, this is not something he wanted. He did not want this spike all the way up to 4.5 on the 10-year. That's the bit that panicked him here. And of course, it's calmed down. That being said, it hasn't responded as much as you'd expect, which makes, the comment we saw earlier about is there a bit of a credit crisis going on. Again, I think that's too much to play into that just now. For now, what we need to focus on is getting the market back to a semblance of normality, finding some trend, finding some balance. In the case of Bitcoin, trying to restore some excitement back above its EMA ribbon. And it'd be good if we can just reclaim trend, right? And again, it doesn't have to happen immediately. We just need to win our small battles, win that W pattern on the hourly chart, right? Really important that we bounce from this neckline. That can then help us on the 4-hourly chart, stay above the CMA ribbon, right? This is what we need. This is exactly what we need. Come here, bounce, and off we go. Use this 4-hourly EMA ribbon as support to move us back to the upside. Again, we need to monitor the news. We need to know what's going on. The positive CPI data is really going to help us. For those just tuning in, we got good CPI data, successful CPI data. The month-over-month figures look good. The core inflation figures look good. It's some of the lowest figures we've seen since March 2021 on the core figures. In fact, month-over-month, we even had a deflationary 0.1%. Really good data, long story short. And that's really, really good. Dear Spence saying, what could cause a credit crisis? At the end of the day, if there's a credit crisis, if banks are struggling on the one end, remember, the Fed's going to step in. Even if he doesn't want to do rate cuts, Jerome Powell will step in and increase some liquidity measures for the banks. So, it's not something you need to worry about. We've seen the Fed come out very regularly to protect the banks, and there's no reason they wouldn't do so if they had to again.
This one isn't the same as your other two, which were more Wall Street focused. This is about New York City.
Well, all of them are about a financial crisis of one form or another. And again, this is the 50th anniversary of the 75 fiscal crisis in New York City. It's a good time to discuss the issues. A lot of mythology out there. If you ask even an informed person about it, they'll say two things. One is President Ford told the city to drop dead, and Felix Roden came in and saved the day. Well, that isn't quite exactly what happened. Ford bailed out the city. He was always going to bail out the city, but he got blamed for it, and he got no credit for it because he was outfoxed by 3 Irishmen. One was Hugh Carey, the governor of New York. The other was Tip O'Neill, the House Majority Leader. And the third was a fellow by the name of John Patrick Scanlon, who was a PR genius and a semi-rogue. But again, the rogues back then were a lot more.
Let's cover this off together, guys. So this is Trump 6 minutes ago. Trump privately acknowledged that his plan for tariffs could push the US economy into recession, but he wanted to avoid a depression, the Wall Street Journal reports, citing people familiar with his conversations. Trump had lunch Wednesday with legendary investor and brokerage funder Charles Schwab on Wednesday. And ultimately, we knew this, guys. We spoke about this yesterday. I tweeted it. Let's see if I can find that tweet for you guys. I tweeted this exact thing. Here you go. I guess Trump's upset billionaire donor friends gave him a call and told him this isn't working for us, which is exactly what happened. We saw Bill Ackman tweet. We saw the pressure coming from Elon Musk, who didn't like the tariff plan, who, of course, is close to Trump. We saw the pressure coming from Ray Dalio. We heard, and of course, he sat down here with Charles Schwab. People were not fond of this plan. They were worried it could have serious ramifications. And when I say serious, similar to that, depression, not just recession. We spoke yesterday about how some of the days we saw were some of the worst days days we've seen in stock market history. You navigated that since April the 3rd, right? There were some tough days we saw. And I think Trump, fair play, eventually saw reason, saw calmer minds, and managed to get that U-turn in. I think he got his desired outcome. I think he'll quietly be happy that the market responded quite quickly, because he may have, in the back of his head, been worried about how quickly we'd respond back. But the market did it. 10% yesterday on the S&P. Even though it's calling down today. Same on the NASDAQ, 12% yesterday, even though it's calling off a little bit today. But overall, markets are feeling a little bit more buoyant, and the CPI inflation should help with that. Let's jump onto the economic calendar here, because we've still got more stuff to go, right? We're here on the calendar. We got the CPI, that's fantastic. We get some initial jobless claims as well, that's fine. I'm more focused on the Fed officials are speaking. I'm not too worried about those guys. There's 3 of them today: Fed Logan, Fed Bowman, Fed Goolsbee, Fed Harker. Sorry, there's another one as well. I more want to switch the focus to tomorrow, which is your producer price index. So your PPI inflation. Again, I think it's going to be a little bit early for the producer price index to show some of the effects on tariffs, but I think that's where we're going to spot it first. So maybe not in this reading, maybe in the other one, but we do need to pay attention to the PPI inflation, because that typically is what tends to pass then on into CPI. So one for us to watch. Tomorrow, again, markets are waiting for this Fed cut, right? Are we going to get this Fed cut? That is the focus in the market. If we take a look at fear and greed index, huge improvement, right? Yesterday we were sitting at 18, extreme fear. See how quickly we jump back up the number line, now sitting at 39, which is still fear, but far better than we were.
Sarah, has a risk premium been added in some way to what was considered a riskless asset, or does that say too much?
As of yesterday, that was the discussion.
Yeah, it sure was. But does it continue to be?
It might be. The fact that the U.S. is capable of doing this sort of policy shock, I do wonder if it brings into question, the questions about brand USA, and does this tarnish the appeal of U.S. assets or the credibility of U.S. assets. Impossible to answer that. We have to just see that over time and what foreigners do, for instance, with their treasury holdings. And we'll watch these auctions, which, become interesting now, right, to see what demand looks like. I will say, there's...
I'll come off the bond talk for a little bit. Instead, let's focus on actually talking around some of our... Was I on mute for a while there? Hopefully not. We'll focus instead on some of our figures to do with altcoins. A lot of people are asking me, altcoins, do I need to be buying the dip? Which altcoins do I need to be picking up? Is it too late? I mean... The best rule of thumb I like to use is the EMA ribbon. A nice, tidy EMA ribbon. Use it to see if we're mean reverting, right? That's what I want to use. I want to see, are we mean reverting? Let's listen to this guy. What's he got going on?
Saying that Kansas City Fed President Schmidt saying that in the conflict between growth and inflation, he intends to keep his eyes squarely focused on the outlook for inflation. He says he's hesitant to embrace the theory that tariffs are one-time price increases. This is the kind of tough talk we've heard from other Fed officials. He's concerned that a further jump in prices could push up inflation expectations. And once inflation is embedded, it becomes more difficult to contain. He's not willing to take any chances with the Fed's inflation-fighting credibility. So again, more tough words, very much echoing what Powell said on Friday. Lori Logan also chiming in. She does say the Fed is well positioned right now in terms of its current policy. So not expecting any big change here, but higher tariffs would boost unemployment and inflation, and the Fed should keep tariff-related price increases from becoming more persistent. In other words, it's the Fed's job here. On this issue of what changed yesterday, a reduction in downside risk, but it didn't go away by any stretch of the imagination. Take a look at some of the calls that we're monitoring here. Goldman did walk away from an odds-on bet about recession, but went down from 65 to 45. MetLife went from 75 to still above 50% at 60%. I emailed Bruce Kasman from JP Morgan. He's maintaining his recession risk, says risks have moderated. And Morgan Stanley says the pause lowers the immediate downside risk, but prolongs uncertainty. I don't know if the concern about this. And then real quickly, here's another look at what Sarah was talking about. I got a range of views out on the street. Oh, here's Citi saying pausing reciprocal tariffs excluding China does not essentially mean the U.S. economy has avoided a slowdown in growth. And just here's the trajectory. We had a 3% tariff rate before. The Rose Garden tariffs raised it to like 30%. And now, very much like Sarah was saying, I'm seeing the effective tariff rate, including China, 20 to 25. Wells Fargo's at 27. So the bottom line is, guys, we still have very high tariffs in the United States, and economists still need to forecast lower growth and higher inflation from both of them. Guys?
All right, Steve.
That's a very, 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 very strong summary, very good summary. And that's exactly where my mindset is at, right? Is it better than it was yesterday? Yes, because we got the reversal. We're away from those crazy, ridiculous numbers, which, as we just discussed, could have driven us into a deep recession/depression. But are we out of the woods? Absolutely not. Are there challenges ahead? Absolutely. Could we still have a recession? Yes, absolutely. Can you just bring interest rates down? No, there could still be underlying inflation from these tariffs, like they just shared there. Probability of recession is still priced in. It's just come down a lot from yesterday. The probability, the tariffs have gone up from 3% to even now, 10% blanket on everybody is a big change. It's going to come into the numbers. Yes, it's not as bad as the 40%, 46%, all those numbers that are being thrown around. I get it. But if you add on China as well, 125%, it's going to have an impact. So let's be rational here. Let's understand that, there are still consequences. We're not just out of the woods and back to party mode from before the inauguration and, oh, look, Bitcoin strategic reserve and the rest of it. No. There's some real challenges, and we need to understand that. So coming back onto the conversation we were talking about before, that breaking news from the Fed just came in. And again, just to reiterate, the Fed are positioning in the same way, right? They're saying, no, we're not jumping the gun here. We still got work to do. Inflation could still be high. The effects of tariffs, could still come in and be lingering. So we're getting clear messaging from the Fed, avoiding us from getting excited that we're going to get some sort of a rate cut, which is very strategic from them. So in terms of buying altcoins, just bring out your EMA ribbon and take a look at where these altcoins are. I mean, Ethereum is miles away from its EMA ribbon. And I'm using this as the basis for what's cheap. I mean, Sonic's EMA ribbon is a bit younger, so you kind of don't have it to look at. But again, hugely under the 99 cents you were buying on February the 17th. Let's bring out the weekly EMA ribbon for some of your other favorites. I mean, let's take a look at XRP. Into the EMA ribbon, and as a general rule of thumb, buying in your weekly EMA ribbon is you buying from a position of strength, right? You're buying the mean. If you've heard of the conversation around mean reversion and buying from the mean, you tend to do really, really well because you're buying from positions of strength. You're not chasing these candles up here on XRP at $3.33. Instead, you're buying from positions of strength at $1.92. These tend to be good areas. Yes, I know you could have got it lower in the last few days. You could have got it to 161. But the reality is the world's changed since yesterday, right? We've changed. We've gone to 10% tariffs. So that opportunity has gone, but doesn't mean you miss the next opportunity, which is still undervalued tokens, right? If you need certain tokens, if you want exposure to certain tokens, you have to look at the price relative to price action. And many of these, like Solana, well below the EMA ribbon. EMA ribbon still flipping to the downside. So, when I look at these, I still see plenty of opportunities to add altcoins at good valuations, at cheaper valuations than we had just, a few months ago, definitely in December and January period up here in some of these altcoins. You're still buying it at a huge discount. And ultimately, that's what you got to learn to do, right? When the market goes through down periods, and if we're going to go through a little bit of a recession now, which, thank God is not going to be a deep depression if Trump lost his mind, then still, those are times to be accumulating, right? Those are the times to actively be building your portfolio and doing a lot better. So I'm still actively trading. For those of you watching this live stream, if you want to follow my trades, get yourself into my Telegram community. I'm going to share some screenshots of what you'll see inside. If you jump my Telegram community, you will get a bunch of, let me see here. Can you see this? You'll get your signals, right? I give you my key chart patterns. I give you my take profit levels. I give you my stop loss. I give rationale behind why I'm taking every trade. 2 trades being taken today on altcoins. Get yourself in that community. Link is in the description, okay? Well, why has my face gone to the top corner? Let's fix you. You go back over there, buddy. Cool. So that's good. Inflation trending in the right direction. I'm still actively trading, guys. For those of you asking, I trade the market, right? Whenever I see a good opportunity, I pull the trigger, like I've done on 2 big altcoins today. Let's see what the chat's saying. Hi, Ijaz. Are you able to show us how to get the EMA ribbon? I can no longer find the four flies EMA anymore. Yes, just add the EMA ribbon. Just if you go in, you might not get this exact one, but if you take any EMA ribbon, you can go into the settings and adjust them. Let me see. Take a screenshot of that. That's what I've got. Okay, so if you just use 21, 25, 30, 35, 40, 45, 50, it doesn't matter which one you use. Just make your own. Add these and set the colors to whatever you want. You can even copy these colors. Cool. Anything else in the chat? Drop them in the chat. Oh, you can't see my screen. Thank you. Let me just show you that. So take a screenshot of this. Here. 21, 25, 30, 35. Take a screenshot of that. And you can add your own EMA ribbon. Cool. Or take one that exists and just change the settings to these EMA ribbons. And by the way, indicators are really easy to do. Like, you can use AI now to build your own indicators. So don't stress about someone not having an indicator. If you want me to build these and label them Ijaz Crypto EMA ribbon, so you could just add it, let me know. I can make that for you. We can even change the colors to something more unique. Let me pull up the chat so I can see it here as well. Cool, Speedy. Thank you, guys. Make sure you're all followed up, guys, if you're not. Trying to get to 20 followers here on Kick. New start, guys, starting from scratch. It's always daunting starting from scratch, right? But again, I just want this to be a community where we're live together. We watch the market open. We monitor what's going on. And hopefully we kind of tailor these streams to what you want. So more things you want to see in these live streams that you vibe with, that you enjoy with, let me know. Shape these live streams. If you like more of the new stuff, great. If you like more of the TA stuff, great. If you like more of the trading stuff, great, let's talk about it. But broadly, you know me. I want to do technical analysis. I want to do fundamentals. I want to bring the macro economy, because that's how you trade for real. You know the number of traders I've seen that are hugely awesome traders, right? Better technical analysis than mine, you know, amazing traders, good hit rate, but they don't know what's going on in the macro economy. I've seen it so many times that they open 3 or 4 trades not knowing that Trump is going to tweet and dump the market because of something around the tariffs, right? You gotta use it. Ralph Abba says the feeling is different from having to watch the uploaded videos, feels more engaging. Good. We'll still do the uploads on YouTube. We'll do tokenomics. We'll do deep dives on YouTube. And I'll even post this on YouTube for those that want to catch up in ×2. You know, that's useful for people. Watch it in ×2 and catch up on what happened. If you're, you know, half an hour late or an hour late, it doesn't really matter. But for those of you who are able to make the lives, I'll try to keep it the same time regularly for the market open and the market close. At least we can engage, right? You can ask questions. We can go through different things, and more importantly, respond in real time, because it's one thing someone talking about the CPI 3 hours later, but talking about the CPI when it's literally just come out, that's what we want to do here, right? We can see how the market is responding. Is it feeling happy? Is it feeling negative? We can see that. So today, you know, the way I look at it is if we didn't get a good CPI today, I think today could have been nasty, right? I'm talking like 3, 4, 5% down on Bitcoin today, because if we're falling down 1.4% despite a good CPI reading, you could tell the market's still nervous. So yesterday was the euphoria. Today is more sobering up and saying, okay, look, we are good. It's not as bad as where we were a couple of days ago. But let's come to terms with the fact that tariffs are still higher than they were, and we're still in a position where we need to, you know, we're not going to get a rate cut just yet. People are just sobering up to that. From my perspective, beautiful opportunity to keep accumulating, get more cash, try to build the portfolio, keep doing what we're doing, because, you know, once we because once we get back to a normality, things are going to pump again, and we're going to just wish we accumulated more in these moments, right? Rafaba, the Kick Live, Ijaz Capital YouTube channel, and the Crypto Wealth Circle are my sweet babies. Appreciate it. Yeah, lots going on. If you guys aren't part of the various different things I've got going on, there's a main YouTube channel. We've got a more business, nerdy focused YouTube channel as well called Ijaz Capital. Make sure you're followed on there as well. Again, not aiming to try, you know, get millions of subscribers. Oh, let's moon. Never been my objective. I want a select group of you guys focused. We can deep dive into the things that matter, because ultimately trading is not gambling. Trading is about having a strategy, being smart, monitoring the market, spending time. And that's what I aim to show you how I do here.
how defensive the trade is today. You have 10 of 11 sectors in the red right now. Your sole winner on this day, the day after, is consumer staples, up about 0.7%.
Defensive market.
So even that isn't really seeing a lot of robust bidding going on.
88 of the more than 100 stocks in that NASDAQ 100 are in the red today. So defensive tone. To your point about the bond market, interesting also. That auction went okay yesterday.
It did.
There's another one today, a 30-year.
Yeah.
I think that'll be interesting.
I'm glad you brought that up because it definitely got lost in the sauce because we got that Trump Truth Social post about 20 minutes later. But you actually saw the S&P 500 spike a little bit after we saw that strong demand. Someone quipped to me that, you know, the U.S. is trading like an emerging market. When was the last time you saw stocks rally because a bond auction went over well?
A dearth, apparently, though, of direct.
I want to come on to this because this is really interesting, guys. Insider trading at the White House. Remember, on Truth Social, hours before Trump announced his U-turn yesterday, which led to a 10% day in the market, what did he tweet? He tweeted, today's going to be a great day to buy. Can you imagine that? This is a great day to buy. Insane. Insane. And then the market pumps 10-12% because he knew he was going to announce his reversal. Well, take a look at this. Senator Adam Schiff said he would demand that the White House tell him who knew in advance that Trump was going to once again flip-flop on tariffs. Are people cashing in? There is just all too much opportunity for people in the White House and the administration, and you can't put it past them for a minute. So we're going to try find out. Crazy, crazy, crazy. Look what he says. They may have an hour to know, or they may have a day, but someone knows, he said. And the question is, are they trading on that information? Are they profiting while other people's retirement savings are on fire? Are people in the administration making money out of it? Guys, I would not bet against that. I mean, that's, for me, that's a certainty. We saw how they did that with the Trump token. We saw how they did it with the Melania token. A president who can launch meme tokens, you think he ain't doing some insider trading with some of his guys? I mean, come on. Insane that you could tweet such a thing. You know, I don't for a second think that these guys are not insider trading. Of course they are. Crazy. Historical returns on a single day. You think they're not taking that? Of course they are. Of course they're taking that. Cool, guys, let's wrap this up here. Good inflation data. Markets are on the defense after a crazy day yesterday, but onwards and upwards. The mission stays the same. Our focus stays the same. We keep plugging on. It's a healthy market. I maintain that. I'm not scared. I'm not thinking, oh, we're going into a bear market suddenly. No. I think there is pent-up demand. I think there's excitement. I think the traditional markets want to pump. I think crypto wants to pump. There's just this noose around our necks, which is loosened yesterday a little bit, but it's still there, which is Trump is on a mission to fight these tariffs, and that uncertainty creates some pain in the markets. Also, we're not any closer just yet, even though the data's improving, to those important rate cuts we need, which will turn the money printer back on. Hopefully you enjoyed this live stream. If you like it, smash up the likes. Make sure you're subscribed and you're following on Kip, supporting what I'm doing here. Again, weigh in the comments. What do you want to see in these live streams? What do you want to see improve? Thanks for watching, and I'll see you in the next one.